Hello everyone and welcome to another video. Today is 9th of June 2024 and we're gonna do as usual our weekly analysis. Before moving forward, I just wanna go through some of our last week data we had, and also we had two central banks coming out on the news, and the first one was the Bank of Canada on June 5th coming out, and they just did as expected, cut raised 25 basis point, and why they did it, and what are the outcomes which we can see in couple of next days, or let's say before next meeting. It is going to lead to more cuts or more hikes. We will talk about that. And we also had ECB meeting, and as expected they cut the rates. This was the second bank after following Bank of Canada cutting the rates. And we will also talk about uh, why they cut it, and are there more cuts on the table for this year, and what are the economic projections they have given to us, both Bank of Canada and European Central Bank. And also we also had Reserve Bank of New Zealand, which came on last month on May 21st, and they were like really hawkish on their side. Market wasn't expecting any of the hawkish comments from RBNZ at all, but they did came out and gave hawkish comments, including they increased their economic projections. We will also go through all of these data. So you might be wondering why we like put so much focus on these central bank decisions. Well, before start trading, or let's say you want to create a bias on a currency, so you really need to understand that these the central bank are the base of any nation's economy, even if it's about RBNZ, Bank of Canada, any central banks. So let's start with the Reserve Bank of New Zealand. We had a hawkish comment, and let me go back to the May 21st when they actually came out and gave us as expected market expectations 5.5 interest rate. And if we look at the statement, right now I'm having in my hand with the projections. They just increased their projections for the cash rate. They see for of their official cash rate for 2024. If they look, we see on the June they increased from they didn't, let's say they didn't increase, they set their rates expectations a little higher. And actually this is really going against all of the major central banks, right? All we can see that majority of the central banks are going for a rate cut right now, and this one RBNZ came out and said, hey, listen, we are not going to cut the rates right now, and just if we have to, we can increase the interest rate for this year and can hold this current interest rate path, the restrictive levels for maybe for the for whole next year. So what are the OCR rates projections we had from 5th of June from RBNZ? So for June they said they can increase it to 10 basis points, 5.6, and for September they can keep it there, and on December they can increase by 10 basis points. So all this thing, they are saying that they can increase if the inflation does not come back down to their target levels around 2%. So for the 2025 projections, the overall rate for 2025 OCR, let me just have a look on the other side. Okay, so 2025, their average rate can stay at 5.6. For 2026, it can stay to 5.2, and as you can see on 2027 it can stay at 3.9. So let me show you the chart where I'm looking at right now. Let me bring this up. Okay, so this is the MPS monetary policy statement they released on their last meeting. So as you can see, this one chart tells us the overall figure where the bank think their official cash rate gonna stay for 2024, and including we are having a CPI annual. Okay, let me just cut it off. So CPI inflation projections right here. We are having a CPI quarterly inflation projections right here, and also GDP growth right at the bottom, not at the bottom, at the middle. So if we look at OCR, right now we are sitting at 5.5, and if you can look, they started increasing their interest rates in 2022 March, and they just kept increasing till September 2023 when they reached at 5.5 basis point. And this is the time when every central bank was trying to reach at the restrictive level where they think that the inflation will no longer goes higher, and feels like this is the sufficient restrictive level which can help to reduce the inflation and help to come it back to 2% target. So after that we had 2024 March where they released and said like, oh hey, we're gonna just keep where we are at right now, 5.5 cash rate. And after that they just came out and been very hawkish, and the market really surprised. If we look at the RBNZ statement, if we looked at, and if we go for let me just bring in the New Zealand pair. So let me just bring in the 21st of 1718. Let me just go for this 23rd. '21st. All right. So as you can see, on this part, they gave a really hawkish comment, and so RBNZ hawkish statement. All right. On this time they came and we saw some a really good spike on this price of 1.58%. After that we saw really pull back on that move, but it wasn't something that we were expecting, and so it was a perfect way to buy at these levels, and where we can expect some really good move on the pair. So that being said, we will talk this later about the technicals, but if we look at the report, and if we look at the statement right now, so the statement says the monetary policy needs to be restrictive more. There was a hawkish comment, and restrictive policy has reduced capacity pressures in the New Zealand economy and lowered consumer price inflation. Annual consumer price inflation is expected to return to within the committee 103% target by the end of 2024. So if we look at the projections here, let me just bring that up. So this says they expect committee expect the inflation to come back between 1 and 3% by the end of 2024 here. This is what they are thinking, that by the end of 2024 it's gonna be close to 3%. So overall, the market really focused on the projections. They gave really hawkish projections rather than they didn't cut the rate. They kept it right there. So here's the thing. So as we already know that the markets have the economies, or let's say the central banks, are already reached at restrictive levels, and when coming to trading these central bank decisions, we need to understand that what the scenarios can be. So if we the market was expecting no rate cuts at all, so how we can trade that event? Let me be clear. If you want to trade something, the central bank decisions, and if this is your first time, you don't understand really how to trade this, just don't rush yourself to trade these events. Just like take this as an example and learn how the market reacts. The market's gonna stay here forever. Just don't rush your money to get into the trade to just grab a quick buck, or you just want to convert your $10,000 account into millionaire account. That's not something you should be looking at. So to the point, how we can trade these central bank decisions. So if they don't increase the interest rates and market were already expecting that, there is nothing surprising there. So we are not looking to trade something that is already expected. So when they don't increase the interest rate, so we move forward to the statements. So after that, we look for like what are the economic projections they gave it to us. Are they hawkish? Are they dovish? Or they just came as the last ones? So for, our next point goes to right there. So if we see some hawkish as we saw in the RBNZ, we can put a trade and look for, again, this is just a possibility. This is what we anticipate. This is not something we can say like, okay, this is just gonna happen at any cost. This is not what we are trying to do. We, as you know, we are trying to do something called probability. So there is a probability that with the bank coming with no cuts and keeping their rates restrictive, but with hawkish comments and hawkish projections, we can buy this currency because this is totally against and didn't what market expected. So we can see some reaction from the market and go for some New Zealand longs and can create some profit on the table, can put some profit on the table. So this is a statement, and if we, this is the quarterly. So if we go to the right here, so I think this is the table or this is the table. Let me just make sure we are on the right table. Okay, so this is the inflation, this is their cash rate projection, this is their GDP projection, and this is their unemployment rate projection. These are the major components we are looking. So we don't have to go through till 2023. These highlighted marks are the one we are currently focusing, and we should be focusing what is coming, what is upcoming. So just here's the thing: market is always thinking in ahead of time. They want to be there before the banks get there. They just want to be like prove themselves super smart. That's why when we get surprises, we see huge volatility in the markets. So if we look at the CPI, we are the bank is projecting that it's gonna stay around 2.8% by the end of 2025. And by 2026 and 2027 we can see some downside on that projections. Official cash rates gonna stay high for next year and will stay there for a little bit downfall in interest rate for 2026, and 2027 it can get about 3.9%. and GDP same projections, and for unemployment rate we can see it can stay 5% for the next 2 years. So that was something we had and this is okay. So here is the thing, it is very important to look for the pairs, which one is strong and which one is weaker. So as you can, we saw a pullback, and price came right at the higher highs. She made high right here, right here, and it just cracked that level. Then again the sellers bought in and pushed the market down, and the market tries and broke that level right over here. So the major thing was that the market, the price is front line right here. Anyway, forget about it. This front line does not matter. So on that case, the FOMC, or let's say the dollar, was really strong at that moment, and it's not enough for the kiwi to break and go higher against its counterpart. But if we go for let's say land Aussie, okay, Aussie New Zealand, right, this one. So look at this. We had the season here, right? And we saw a pullback, and look at this against the counterpart. Like, this pair is down by 170 pips after that. This is something we trade. We just don't go for anything we see on the table and just try to grab something. We go for like low hanging fruits. What are those? Really surprising the markets, and that's how we grab our pie and move on to our next trade. So that being said, that was the Reserve Bank leaving a hawkish. So if you are asking like what are the base case for this currency, well, I can say that from my perspective, this currency holds more weight now, and it will get stronger if we start getting some inflation reports, some growth, and some labor data stronger than expected. Then we can see that this pair will may give us some more opportunities. And also, just a quick reminder that we also having Reserve Bank of Australia, RBA, coming out on 20th of July. That is also worth keeping in mind, that if they stays dovish, then this pair we can look for going down more down to these levels. But we will see. As you can see, this pair, if it gets the momentum, it gets the momentum. Just cut these old trend lines here. So this one does not matter. It's just old trend line. Alright. Clean, nice and clean. We don't need those many trend lines here. Okay. So what about next? Let's go to last week now. Alright. So last week we had some great opportunity to trade the dollar. We had a final manufacturing PMI coming. It was kind of better than expected. With the it wasn't. I'm sorry about that. It's S&P 500 manufacturing coming, but it came in contractionary territory. So those who don't know what is ISM, it's a Institute of Supply and Management, and for being the part the US economy does not, the manufacturing sector does not play a major part in the GDP, so markets tend to not much focus on these data. But however, if these data start showing some really contractionary sides, then it came worth noting and can be tradable. So this just gave a really good opportunity to trade short the dollar against New Zealand, because as you know, the bank is hawkish, and this is the not good for FOMC to raise the rate. So that's where we took some profit. And Joe Sarah, we didn't like to took the trade. It just came in a range, so it wasn't something I was looking to trade. Aussie GDP came in 0.1, but as we can see, the last one was revised up, so there is nothing. So here is also a thing we need to understand, that it is very important that the reasons and the data we are getting must came in come in alliance with either one side, negative or positive. We don't want to trade something the reason coming better than expected, and we are getting the actual numbers coming worse than expected. We don't want to trade like these data. So ADP not something I look to trade. However, Bank of Canada, we had June 5th, and let's go through some of the talks they did. And let me just get that. Let me just give me a second, guys. Let me have a water. Bank of Canada. Okay, and their projections right here. Alright. So on June 5th at 10:45 Atlantic Standard Time, Bank of Canada came, and as expected, as I said earlier, when the market, the stock market is already expecting what the move can be, then we move forward to the statement. So if the bank came in at 4.75%, decreased from their prior 5%, 25 basis points of rate cut they showed to us. However, the statement was really dovish. So if I read the statement for you guys, so the Bank of Canada, Marklem says, we are taking our rate decisions one meeting at a time, and reasonable to expect more rate cuts if inflation continues to ease. Okay, so that is a really dovish comment coming out of the Macklems. And what was the other? So so if we just look at the projection, let me show you the projection of Bank of Canada. These ones. So let me just zoom in. So here is the thing. We are in 2024. We are already past quarter 2. The CPI inflation, they said it's gonna stay around 2.9%, GDP 1.2, and the real GDP 1.5. So look at this. 2024, they are expecting on average by the end of quarter 4. The last meeting they said it's gonna be stay at 2.5, but they decreased 2.2. Okay, that's the first dovish projection. Second one is real GDP year-over-year percent change. That is 1.6 that was said, and they increased to 2.1. So for quarter 4 2025, they're expecting to stay 2.1 and 2.2. This is something we look at before trading the Canadian dollar, that what are the projections, and what should we look to trade again. So there was a quick trade we took, and I took, and it was really really going into great thing. Let me just bring in US CAD. It's right here. So currently, as I expected, we are here. So we had a rate decision on this day, and also we had ISM services manufacturing services data coming out of US, and it was came better than expected. So the market tried to break this trend line, but the price fall again and reached at these levels. And then we had NFP coming out better than expected, and this just pushed and crossed this level. And my current target is to reach at these higher highs. Why I wanna looking for these higher highs? Well, if you look at this, this is a really strong trend line right here. Nice swing area. So Bank of Canada coming really dovish. So Bank of Canada, what we are looking for upcoming week, we can look some inflation data, any other data. If came in line with the projections or came worse than expected, then of course we can look some more weakness in the dollar. And if it came better than expected, it really pushed back the narrative of more rate cuts by the Bank of Canada. Well, that being said, now move to the European Central Bank. Just put this. Now let's talk about ECB. ECB, where are you? Right here. So these are the projections we will go through, but before that, let's just see. Okay, on Thursday, June 6th, ECB cut their rate by 25 basis points. As I said in earlier, this was the second bank followed by Bank of Canada cutting interest rate by 25 basis points. However, now here's the tricky part. This one was a hawkish cut. Well, you think why? How do I know this was a hawkish cut? Well, they decreased the interest rate, and it should lead to sell off euro. That's what you will probably be expecting. But here's the thing: if it has been so easy to trade this market, everyone could have been trading. So what they did, they came out on June 6th, and they decreased their interest rate, but they increased their projections. Oh yeah, they increased their projection. Look at this. So GDP, inflation, core inflation. So the GDP, they increased their projection zero point 0.6 to 0.9. 25 stays the same, increased. Inflation was for May 2024, it was 2.3, they increased to 2.4. 1.9, 2.2, 2.0, 1.9. So core. So as you can see, they increased their projections of GDP and inflation, which gave a boost to euro. And if we look at the euro USD, here. So on over here they increase their interest projections. We saw a really nice pull up, and it didn't came. It just kept their strength till we had a strong NFP. So from these three central banks, what is the conclusion is, before jumping in the markets, we need to understand that how these markets got traded, and what they're gonna do in their next move, what the next move in, what are the scenarios we need to prepare ourselves before jumping into these markets. So now we have talked about the the meetings that were already held. Now what about the future interest rate meetings that are happening next week? Well, we are having FOMC on Wednesday. We are having a Bank of Japan policy rate on Thursday. So what should we do? How we prepare? What should we look for these events? Well, so again, the rule, trading in simple. If you keep it simple, it's not that hard. So here's the thing: as the market is expecting 5.5. Well, if they came and kept the rate 5.5, there is nothing to tradable. However, we move to the economic projections. FOMC economic projections, what they're gonna give it to us, what they put on the table, including the FOMC statement, if they came and really gave us hawkish statement, FOMC press conference, all of these things we should look for if we want to see how to trade this. This is if we look at the pound. Okay, so let's start from Sunday. We're having bank holidays everywhere, so nothing on Monday, Tuesday. We are not having anything major that can create some volatility over the markets. Okay, and on Tuesday at 3 a.m. probably I'm not going to be awake to trade this event. If you are, then claimant count 10.2k, average earning 5.37, and this is the labor data coming out from sterling. And just a quick reminder that on June, when is the next meeting? On June 20th, we are having a sterling meeting coming out, and that is something we should look at. I think this one is gonna be the last labor data before they give us really any decision on their monetary policy. And if we really look there, I think there can be a two-way opportunity. If we see a really good numbers here, then we can look for a short against the counterpart over that time, which one is not trading in a good way. And it can be, if we see some beat, if we see some worse than expected, then of course we can go against our counter currency pair. On the China side, this is something to always look for. CPI and PPI coming out. Also, China has really good ties over Australia and New Zealand. They do a lot of business, imports and exports, and it's really good thing to keep an eye on what's going on in China. And also we are having a GDP month on month. This is not something something can create some volatility, but anyway, just keep in mind that it's coming on Wednesday. So this is the major event: core CPI month on month, year of year. So remember, the inflation has really got stickier, got stuck at here, 3.4, 3 right here. If we look at the line, you can see here, it's just there from July 2023. It's been a year. It's gonna be a year where we are stuck right here. So the point is, if we see a downfall here, going down to 3%, it's gonna be really back to July. Can create some huge volatility. And again, if we see it going back to back up to 3.5, 3.6, it's going can create a huge one. It's a two-way opportunity right here. And of course, we also having FOMC. Then this something these two data comes. It's gonna be busy Wednesday. We're having a speakers. Bank of Canada McCallum speaking, and for the, as I said, employment and for unemployment rate from Australia. PPI, it cannot be very much volatile, but we should look unemployment claims. It stays in healthy territory. There is nothing tradable gonna be there. And we are having two central banker, Yellen, Secretary Yellen, and Member Williams coming. Keep an eye. But we are also having a Bank of Japan policy rate. The consensus is that they're gonna keep their interest rate at 1%, and they're not gonna change. However, there is a talk going on that they're gonna maybe reduce the bond holdings. If they do, then it can be good for their currency. However, it's something we will look for on Thursday and on Friday. It's just one major data we are seeing: University of Michigan consumer sentiment and University of Michigan inflation expectations. And as said, it's not just the end of the story. There is more to talk. There can be more things we can look for. So however, this is where we end our weekly analysis, and hope you guys enjoyed it. Hope you guys have something you have learned from here. And if you have any questions, if you have anything to say, just drop down in your in my comment sections, and we'll look and get back to you. And everyone have a good week, and you have a good start of the weekdays from Mondays, and see you on the other side. Bye bye.